Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, the 17th of January, 2018, just after 5 p.m. Central Standard Time. I wanted to get the openings because if you're watching my metal update, I was making point that I said, you know, that April gold's going to open sharply lower. The currencies were going to open sharply lower, and you'll say, what a magician he is. You got to understand the settlement price time is different than the last trades of the day. I'm not in favor of that. I think everything ends at the same time, but that's not how they do it at some of the futures markets. So I was watching about, I don't know, an hour and a half before they closed the currencies, and I saw where the settlement was going to be, but then I saw the market breaking in the second part of the day. You know, you're going to hear it in the news, that the stock market exploded later in the day. And while the metals had a great move up until 12:30, they look phenomenal. They gave the chunk of that back as the dollar rose and the foreign currencies sold off. That's basically what was going on. When we look at the S&P area chart, my mother's still saying I should have been a stockbroker. I could have just been in this, and she said doing nothing. And she's right. And look at how this market's up for the week. We're up another 14.75 points, all new time highs. When we get to a daily bar chart of the S&P, you can see how the market went up today. Yeah, it's tonight about unchanged, but if you look at that high, 2809.50 versus yesterday's 2808.50, new all-time highs, right? We're unchanged right now, but this market has just been cranking out gain upon gain upon gain. I wrote Sunday night that these markets look to me rich, being up nearly 5%, maybe a little more than that this early in the year. They've held on to that. They haven't added to it by much, but they have certainly held on, and you can see how that's going. Just take yourself back to Tuesday, because I was writing Sunday for the Tuesday events, and you can see we have added to that since that point in time. You still have the pattern of higher lows, higher highs over the 18-day moving average of closes in the 100. Everything's bullish there. The potential resistance in the market is coming from the upper Bollinger Band, and what bull markets do when they get real bullish is they hug that line, and it's exactly what's happened, and it's often accompanied when the momentum oscillator called slow stochastics goes sideways basically over 80. It's exactly what's in place here. And until that oscillator does one of these events where it suddenly gets down under that 80 level, all I can say is you got a bull market, locked in bullish momentum, bias up, and the market's on a run. You have the same thing at work in the NASDAQ. And admittedly, it pulled further back under that top band, and the further it starts getting away from it, it's a sign that the market is running out of the same momentum that some of the other indices are having. That's what I see at work. You've got the higher lows, the higher highs, and the bullish momentum. Nothing bearish on these charts. In the Dow, the bullish momentum. This market today, I was curious, where did it finish? They finished up 279, 26,098, certainly over the upper Bollinger Band. Yesterday, the market finished 25,819 over the upper Bollinger Band. That's 2 days in a row. The day before, though, it closed at 25,801, and the Bollinger Band was 25,660, 3 days in a row. Right here, the market closed at 25.55 over the 25.490, 4 days in a row. The odds of it going to 6 are very small. So tomorrow's one of those pivot days where I just would not be surprised to see the market get back under the upper Bollinger Band. That in itself isn't bearish. It's just the market is paying more and more attention to that, and I think that's important, especially given that since December, this market has come up dramatically from here, and it's adding a lot of value. And since the beginning of the year, it was under 25,000 if you look right at the end of the year, and here's the market up another 1,000 points. Nothing goes forever. I am not a bear. I am not telling you this market has to peak. As a market technician, everything is strong. That's what I am saying. The Russell is sort of like the NASDAQ. It is one of those that doesn't want to participate just yet with the other two. It saw the other indices running late in the day. It came back, but it still closed under the Bollinger Band. It's still very much in a bull market, higher lows, higher highs, but unlike the others, it is overbought as can be. In the VIX, you now have 2 days in a row where the market is up and over the upper Bollinger Band. If we go back and we look at the history of that, typically the market pulls back after that. Will it do it this time? We'll find out. You're overbought. The trend is up. The odds of staying over the upper Bollinger Band, only 5% of the time. The history of this has been for months on end that when you get a few days over it, it whips back the other way, and that would be bullish for stock indices if that occurred. But you don't have to stop at 2 days. Like I just showed you in the Dow. You're at 4 days up. You know, tomorrow's where the percentages of it staying over that number start fading strongly. In TLT, the trend is down, lower highs, lower lows. I think the pros were selling today at the 18-day average of closes. Get over 126.18. I think they'll change their tune. I don't think they'll get bullish, but I think they would change their tune on how bearish they want to be. In the bond market, this whole rally where the swing line's pointing up is taking place under the 18-day average. They fight each other. The bias is down, the swing line is up, you got a big nothing. And when you look at the numbers that make up the slow stochastic, they're under 30. You have an oversold condition. The 10-year notes are different. Oversold. Let's take a look. Both numbers here are under 20. Day before, under 20, but not the day before. So you're just oversold. You need to have both stay under 20 tomorrow to say you've got an embedded reading. But what's really happened is the market has stayed under the 18-day average of closes since literally mid-December. It's gotten to the lower band, rallies back up to the resistance here and stays down. You can't get away from saying that the trend is down, which means higher interest rates are there. That's what's been occurring, and you see it even more pronounced if you go to the 5-year note where the Fed even has more pull in the market. Now in the dollar index, when it reopens tonight, you're going to see it pop, and that's because late in the day that's what it was doing. You got back over the lower Bollinger Band anyways today. You still have the pattern of a higher high and a lower low at work. This reversal that happened today, if we take a look at yesterday's range, 90.58 to 90.10.5, you obviously had a big reversal in that. Could be a sign that the market's making a near-term low, which weighed on the gold market a certain amount today. But if it rallies, it still looks to me like it could be very well contained here. What else on the momentum? Well, in the momentum, both numbers are under 20. Day before they were under 20, not the day before. So I would expect that tomorrow's a pivot day where the market tries to see can it embed, which means keep those numbers under 20 and keep the bear innate momentum going or not. It's the flip-flop in the eurocurrency. You got up, way up, then you came back. Let's take a look at the close today. You closed 122.83.5, and that close was just under the upper Bollinger Band. So you'd already pulled back. You had a couple of days over it. You did what we said. It acted the way we think. And now the market is acting like an overbought market in need of a correction. A correction does not mean it's going to go crashing through 119.64. And even if it did, what does it mean? You're not trending. You have a pattern of a higher high and a lower low. The currencies are looking after V moves almost for trends to set in. In the British pound, yesterday we were talking, and here you've got 3 days in a row over the upper Bollinger Band, overbought. Again, that lower low, higher high pattern. Very, very common right now in all of the currencies. The odds favor that the market's going to try to get back under that Bollinger Band shortly. Tonight it's at work on it. It's already down 60 points. You can see It's trying to be under it right now as we're talking. That number's in the 138.80s. You're 40 points under it at this point. But how many of these numbers are over 80? Today they're both over 80. Yesterday they were over 80. The day before not. You get to that third day, it's very difficult and rare that you embed. If you do, the fourth day becomes exciting. It either loses it right away, or if it keeps it, you could be on to something that grabs in the way of a trend. In the Japanese yen, huge reversal down day today. You had how many days over the upper Bollinger Band? Not today. That day, were we the day before? 90.34.5 to 90.24. That's 2 days in a row. 3 days in a row. All right? Day before you obviously weren't. And that's the point that I try to make you understand with Bollinger Bands. It's one thing you go, oh, this market's going to run on me, but then if you understand the band, you're going, you know, I've got to use common sense and be careful here, because I've already got 3 days in a row. The odds of it going 5 and staying there are not the best. Maybe I can come in better if I'm determined to be a buyer. Maybe if I'm a seller, you can't even find where it's under them because the market's been more bullish than bearish, but you would use the opposite strategy. Bitcoin. You do realize today it got down to the 9,200 level here. So this market has taken a shellacking. It was a market over 20,000 recently, just got to 9,200. Okay, here's what the bulls are going to say. Forget the 15-minute chart. They're going to say you had a 50% correction. Okay. But if you really look, it came from zero and what it did, so it had a big break. Doesn't mean it's the end of it. The bears are going to say it's worthless, and since the futures contracts came about on it, the market has fallen basically half of its price. You pick the argument. I just look at what a market does, and whether it's a 15-minute chart or a day chart, the concepts I teach in my charting course are very similar. On the crude, I have been preaching to you. It's the word I use. I said, I realize Brent is strong as can be in WTI, so, but there's a market within the market, which is the differential between the two, and that's what the traders are doing. And they've taken this premium from nearly 650 down to tonight 540. That's one of the things they're doing. The marketplace, it's on the verge of losing its upside momentum. It has to be good tomorrow. You need to kick that red line up, otherwise prices might be setting back to the 18-day average of closes. In the Brent, which just opened tonight, you still have the embedded reading, but if you lose that reading, maybe you're back to the 61 area. We'll find out. As I said, I didn't think you were going to 65 this year. I'm certainly not looking too good on that bet. In the gasoline, now you're up to the upper Bollinger Band. You've had the embedded reading, still very much in bull play. And what did I say yesterday, which I won't let you forget? There are strong seasonals to the upside coming right around the corner in gasoline and crude. Something to think about. In the nat gas, it's funny because we're warming up finally in the Midwest starting this weekend, and nat gas is on a tear to the upside. So forget your weather readings. They're going to be looking tomorrow at what? They're going to look tomorrow to see how much gas was pulled out of storage because of all the cold weather we've had, and that's what they're putting into the bid right now. The API numbers came out already today for the crude. They were a little bit friendly as I viewed them. We'll see if the EIA, which comes out tomorrow morning, remember everything got delayed because of the holiday, and what they all do. But as we look at everything, interesting evening. It's going to be a wild one, I can tell you that already. And I want to remind you that very shortly I'm starting, and I'm going to try to pick a day for next week, and I'll give you ample notice. Tomorrow's already Thursday. It might be Thursday of the week after. But I'm going to do a live webinar where you get an invite, you come in, you can ask questions, and we sort of have like a Kramer event. We'll see what the charts look like. You bring the symbol, if it's a stock or an ETF, I'll type it in, and if on our charting service we go over things and have a ball with it. And I'll explain my techniques, and I try to reinforce what my students learn. So if you haven't had access to my research, you might want to take advantage. Give us a call. Go to our website. You can click up here if you're watching me on YouTube, or underneath us says click here for Ira's free research on many websites, and we'll take it from there. I'm Ira Epstein. You have a great day, and I'll talk to you all in the morning.